with our presenter at the end. Our presenter for Investing for Older Americans is Terry Paggi. Terry is an investor assistance specialist with the SEC's Chicago Regional Office, which covers Illinois, Indiana, Iowa, Wisconsin, Minnesota, Michigan, Missouri, Ohio, and Kentucky. Terry has been with the SEC since 2011, having previously worked in the securities industry and as a law enforcement criminal investigator. And now I'd like to turn it over to Terry.
Thanks, Mary. As Mary said, I am an investor assistance specialist with the SEC. Currently, there are two of us in our office, and we have we wear two hats right now. We act as intermediaries when people have issues with their brokerage firms or with an investment advisory firm, and they wish to submit a complaint. We also conduct preliminary investigations on matters of securities fraud that come into our office, and then share them with our enforcement attorneys to see whether or not there will be some type of action taken. So we're going to start here. We have just a disclaimer that anything that I speak about tonight is considered to be educational and should not be considered as any type of legal interpretation or investment advice. We'll do an overview of the SEC, and then we'll spend more time in strategies for smart investing, how to avoid fraud, and then planning financially for having a diminished capacity. So if you take nothing away from here tonight, one thing that I am going to ask you to remember is this website here, Investor.gov. The SEC, we have a website at sec.gov. However, we had received thousands of complaints from Main Street investors that they had a very difficult time finding information on there. And I can understand it because it was written for people in the industry who knew what they were looking for. And so what they did was they developed Investor.gov, which breaks things down into very simplistic terms. And then there's various sections on there. So you will see this a couple of times during the presentation. So, and we will go deeper into it. So a real quick overview of the SEC, three major functions. We protect investors, maintain fair and orderly and efficient markets, and we facilitate capital formation. And that has to do with publicly traded companies. Our responsibilities are, we are the regulators for publicly traded companies, broker dealers, and investment advisors, and also publicly traded companies, and the actual markets that they are traded on. I am not going to go into the various numbers here. Not too many people care to know how many things that we do on a yearly basis. They're here for the meat and potatoes of how to protect themselves. If anybody wants to know this, please, we'll have an email address at the end of the presentation, and I would be happy to send this to you. So let's go over here. This is what Investor.gov looks like if you were to access it online. It's very easy. And I always ask people, like, after these presentations, please go through here. Just start finding your way around it. The SEC, what we have found is the three largest demographics of people becoming fraud victims to investment fraud are: number one is seniors, two is military, and three are educators. However, everything that I'm going to speak about tonight really doesn't apply just to those groups. It applies to everybody. So, so if you're not quite up in our golden years like me yet, don't worry. It'll be interesting to watch and see some of the information. So we're going to talk a little bit for strategies for smart investing. Now, every investment has a risk. If it didn't have a risk, there would be no way you're going to make possibly money off of it. Even cash has a risk. It could be devalued. Bonds have risks. Securities have risks. So if somebody approaches you via phone, email, social media, and says they have an investment that has no risk to it, walk away. Cut off the phone call, cut off the social media, just don't deal with them. And if they use the word guaranteed, that's another flag of fraud because there are no guarantees in any investments. Just like there's no guarantee in life. We don't know what tomorrow brings us. Same thing applies in the investment world. So this is what we call your risk tolerance. This is what you're able to sustain should you have money to invest, and what are you looking for. So as you see down in the lower left-hand corner, we have cash. Now cash, it's a very low risk. And this means not only cash, this means CDs, money market funds, savings accounts. You're not going to make a whole heck of a lot of interest, but your chances are it's fairly safe. Now we have bonds. Excuse me. Bonds are they're a way to make a little bit more money, but as we see in the yellow here, they're a little bit riskier. And then we look at stocks. These are securities, mutual funds, and while these have the highest payback, anything that has the highest payback also has the biggest chance of losing money. So as people invest at an early age, their risk tolerance is going to be high, so they can invest a lot at the long-term goal because of longevity is on their side, and they will have the time to make it up because the market does, for the most part, go upwards. Now, we were just talking about the various types of investment options. I mentioned cash, so we have savings, CDs, money market funds, again, lowest returns. We have various different types of bonds, government, municipal, corporate bond funds. These will give you a predictable income stream. And then we have stocks and stock funds. These are where you're going to make your most money. Downside is you can also lose money through it. So when you're looking at risk, you don't want to place all your eggs in one basket. So you want to kind of like diversify your investments. You want to have some, and a lot of it is it's going to be depending upon where you are in your life right now. So people who are investing if they're in their 20s, as I mentioned, they can afford to be riskier in their investments and keeping a small portion in the safe side. But as we get a little bit older, we want a little bit less risk, more, and a little bit more safety. And then as we get into post-retirement, unless you're very uber wealthy, you are going to want to make some money on it because now we have to look at these funds are going to last us until our end of life. So you don't want to put everything where it's not making any money, but you're going to sit there still and want to make some money to make the funds last. So these are 4 products that we see that are marketed to seniors and are horrible products. Okay, these are products that are actually should be marketed to people who are younger. However, it is not illegal to market it to them. It's one of those ones like, let's say a car salesman sells a 95-year-old man a Maserati. It's not illegal. It's not wise, but it's not illegal. So let's start with variable annuities, and this should not be confused with a fixed annuity, which is an insurance product. But this does have insurance features, which, you've been paying into the annuity for a while, and then at a certain time, you start collecting money. Now, for seniors, one of the things that you have to look at is liquidity. And what I mean by that is something could happen in your life where you need access to as much money as you can get quickly. So with a variable annuity, yes, you can withdraw it, but there's going to be a really huge fee to do this. And there are also very complicated tax rules when you go to file income taxes at the end of the year or the following year that are going to apply to it. So you are going to pay a lot of money to get what little you have left in there. This next one is the one that probably upsets me the worst when it comes to being marketed to seniors. It's a real estate investment trust, also known as a REIT. This is you're buying income producing real estate. However, when you sign for a REIT, if that REIT is 10 years, 20 years, you will not get your money, no matter what. You have to wait until the REIT expires in order for you to get your money back. And when you see people in their 70s and 80s that are marketed these products, thinking that they can get access to their money should they need it, and then they find out that they cannot. And there's really nothing that we can do. It's something that should not have been marketed, but it's not illegal because there are sometimes wealthy people who are elderly that get involved in these in hopes that any money that they make off of it, they can pass on to family members. So master limited partnerships, these we see in the gas and oil business. The downside to this is you're tied to one various industry. Like right now, there was a time when gas and oil were the big things to be investing in. However, and everything plays off each other. We got gas that's in some places less than $2 a gallon right now, and that's great for everybody. However, it's not great for people who invested in this because they're not making this type of money that they thought they were. And then we have exchange traded notes. These are you're buying the unsecured debt obligations of financial institutions. So if a financial institution is they're on the selling block and they haven't been run very well, you're going to buy into them, and they hope to turn it around. However, if they don't, there's always the price that where they default on the loan, and when they default, investors are the last ones to be paid. I'll just as a highlight here, when a company goes bankrupt, they go to a bankruptcy court, and they are ordered to pay people who sold them products. So if they sold them metal and wood and everything else, those people are paid back first out of any money that the company has. The second group are the employees, and the third group is the investors. And I'll be very blunt, by the time it gets down to the investors, there's really not much left, if anything. So when you invest, there's a fee. Nobody does anything for free. And this is something that you want to look at. And now what we're doing here is they put together a chart of taking $100,000, investing it, and they gave it a 4% return. Not very good, not very bad, just kind of like right in the middle, nothing big. And the green line is how much money you would have after 20 years at a 1% annual fee. The red line is for a 0.5%, and the blue line is a 1/4%. Quite naturally, the blue line, the 1/4%, you will have more money at the end of 20 years than you would at the 1%. However, what this doesn't tell you is the 1% annual fee is probably very common. We deal with this a lot, so I see it as if you want to deal with the same person, like the person that I deal with in my side, I can call him up and he's the one that handles my account, and I'm always there. I got his cell phone, and he calls me up and says we need to talk and go over things. I am paying for those services. And however, if you go up to a point or go down to a 1/2 point or to a 1/4, those are mostly your online firms, and you will probably not be talking to the same person all the time. So you will call a call center, you will explain, your issue, problem, or concern, and they will go through it at that point. If that, something happens 2 weeks later, you can be a totally different person that you're speaking to. So it depends. Is the money that you're paying for the management of your investments worth dealing with the same person all the time? So that's something everybody has to make a decision for themselves. Now, one of the things, besides all the firms that are, that we regulate, there is a firm called FINRA, which is the Financial Institution Regulatory Authority. Now, there are 2 types of firms. Excuse me. There are investment advisors and an investment advisor firm. Then there are brokers. Those are the employees, and a broker-dealer, which is the firm. The firms have 2 different pretty much missions. Brokers and broker-dealers, and people use the terms interchangeably, but they're completely different animals. So, if you had an online account, or, even if you have an account with a securities firm that's local, but you call in or you go into the office and you tell them, I want to buy 100 shares of ABC Corporation. Right now it's trading at $100 a share. I don't want to go any further than 115, and place my order. They will take your order and you will pay a commission. Same thing if you sell, because you're paying them to do these things. However, that individual may have read earlier that day that there's some big issue with the company that you just asked to buy 100 shares of, and it's going to affect the company. They are under no duty to tell you that. Their job is just to take your order, whether it's a buy or a sell, process it, and charge you a commission. An investment advisor rep and an investment advisory firm they are fiduciaries. They are obligated to tell you and put you first and give you all the information about the firm, fund, security that you that you wish to buy. So that's the big difference. Sometimes people will use the term financial planner. That is a very ambiguous term, and sometimes you will see these people with their they'll be doing insurance, but then also dabble in this. Also, you get these some of these free lunches, free dinner letters in the mail. Stay away from those. You are a captive audience, and there is no free lunch. These people are very good salespeople, and they even may have people employees in there acting like other people, investors, and they get that momentum all wrapped up, and the next thing you know, you took all your money from one place and placed it with them, and now you don't know where it's going to what's going to happen to it. So, if you're picking a fund, how does it match your goals? Look at the fund's performance over time. We talked about your risk tolerance. If it goes down, is it going to affect you a lot? What are fees and expenses? And how does it help you diversify your investment? Now, investment professionals, and I tell this to people, that I meet with my person 4 times a year. And if you are not, you should be. This is your money. You have every right to know how it's being handled, what's being done with it. There are times where I meet with my person and he's showing me what the performance is, and we just everything. He goes, I would leave it right where it's at. And everything has been performing to what we thought it would be. We end up talking sports a little bit, and then we end our meeting. And then there's other times where he would sit there and say, "Hey, this fund has not been performing to what it was supposed to be. I think we should move it over here, this one," and he will explain to me why we're doing this. But as I said, I'm paying him to manage my money, and I'm going to meet with him, and I want to meet with him every quarter. And if they don't want to meet with you every quarter, maybe it's time to look for a new person that will take you and will talk to you. Okay, this is your money. So again, do you need somebody to help you make your trades? A lot of people do. Some of these, where now with the SEC, we are prohibited from holding accounts to where a manager could just make a trade or move money around without notifying us. We have to, every time they want to do something, we have to run it by our general counsel's office to make sure there's no conflict of interest. And if there isn't, then the trades can go through. Others just, they give you ongoing investment advice, and you give them the discretion to purchase or sell. Or you have to actually give them verbal permission to purchase or sell. So there's a whole gamut in there. All right, considering an investment professional, deciding on whether you need one. Some people are very educated in this, and they really don't. They can get away with, trading online, holding, mutual funds online, and doing everything they can because they are very, very educated. Others are not. But I always enjoy the one Clint Eastwood phrase from one of his movies. He goes, "A man's got to know his limitations, understand what services you may need, If you don't understand it, then you may need somebody to show it for you. Know the warning signs of fraud. This is very, very important because most people have heard of the FDIC, and it's a federal depository insurance corporation. So what it does is if a bank folds, your money is insured up to a certain amount by the federal government. Now, there's a thing called SIPC, which is the securities version of the FDIC. However, it only covers losses due to fraud and not bad investment advice. A lot of times what we see is a lot of the fraud are from these smaller boutique firms. You may see them in a strip mall, some type of strip plaza, and there's only like one or two people in there. And there's no checks and balances, like some of the bigger firms. Whenever they do something, it's got to go through several layers of approval. So everything is, the I's are dotted, T's are crossed, and they want to make sure everything's going status quo. But if it's, we have seen in the past with these smaller firms, they can actually make you make an account statement and give it to you, and as far as you know, oh wow, I'm making money, and that money you don't know where it went. This is not a plug, but I always love watching American Greed on MSNBC. If you haven't, I suggest you watch it. It's loaded with financial fraud, and pretty much a lot of the stuff I'm going to be talking, you're going to see the actual people that have done it and the actual victims that have lost money. So it's a very interesting show. Excuse me. Always check the background of an investment professional. Now, this says even if referred by a friend. I would love to change this to especially if referred by a friend. It's just, you're talking my money. There are no friends in the trenches, okay? So I'm going to check on everybody. So you're going to want to check with them, and I'm going to show you how to do this. Are you registered with the Securities and Exchange Commission? Each state has their own division of securities or Department of Securities or FINRA. So what experience do you have working with people like me? So if you're a senior and you have a pension coming in, or if you have like a fixed income coming in, what do they have they worked with you? How are you paid for your services? I've never seen hourly, I've never seen flat rate. It's usually percentage of assets under management. That is for investment firms. There are commissions if you sell through a brokerage firm. And actually, they used to range from $11, $12 to $3 or $4, and then I forgot which one. I think they went to free trading, and the rest of them followed. So right now, there's really no commissions if you try to sell or trade, buy or trade on a brokerage firm online. So a little tips to avoid fraud. You want to research the professional financial, the firm, and the investment product. Be aware of various persuasion tactics and red flags. We will go into that. And be alert to common investment scams, and that will take us back to Investor.gov. You're going to want to see, are they licensed or registered? Check their background. I will show you in a second. You can see any disciplinary action that they've had. Have they had customer complaints? And you will see every place that they worked. One of the other things that I look at is, are they a job jumper? See, because they will mark down, if the person is fired from one firm, they will mark down disciplinary action. But if the person knows he's going to be fired and quits, that's just a voluntary leaving. So now if you see the same person has worked for 5 companies in 3 years, that's something I would probably, myself, I would walk away from, but you may have to sit there and decide whether or not that's somebody that you would trust with your money. Now, if you have a smartphone, Investor.gov is also available off of that. And this is what it looks like if you go to find somebody. Now, this name right here, Jordan Ross Belfort, it may sound familiar, but if you've ever watched the movie Wolf of Wall Street, that is him. And if you have not seen the movie, I highly, highly suggest that you watch it. It will give you a really good insight on how this financial industry works for the bad people. I mean, I don't want to make it sound like it's full of sharks, because there are, it's like any profession. You have a couple that are bad, and then the majority that are very good. So, and you can see here that he has been barred by the SEC. He cannot have anything to do with any type of investments, brokerage firms, investment advisors, or giving any type of public advice on investments. So, is the product registered? A lot of scams involve unregistered companies. So, when a company is traded on a public on an exchange, it's publicly traded. So that means people are buying shares of the company, and they're kind of like part owners. If it's not registered, that's a big red flag. Doesn't mean at 100% it is, because some places are in some states they allow people to they allow companies to sell shares of companies without them being registered. But if they're not, that's a real big red flag. And we have a database called EDGAR, and we will, let's take it right here. Here's what it looks like. So if you're on Investor.gov, you would enter the company's name right here, hit search, and what it'll do is it'll bring up, if the company is registered, it will bring up the address of the company, the phone number of the company, and every time they have submitted a filing. So every quarterly financial report has to be listed with them. Annual filings for financial reports have to be listed with them. There's a file called an 8K. So if anything that is unusual has to be listed. And by unusual, I mean they could be served with a lawsuit. They could have maybe that they fired their internal auditor or external auditors. The CEO is fired. So if you're an investor, you can go right here to look at that company, and by looking at their filings, you can make an informed decision on whether or not you wish to invest with them. And that's clarity right there. That's just what we want to see. Okay, some of the persuasion tactics of fraudsters. Whenever you hear is like, you're going to make 25%. We promise you're going to make X amount of dollars. No investment can ever do that. You never know what tomorrow's going to bring. Okay, so guaranteed or some type of guaranteed return is not happening. Source credibility. This one we saw just recently, where they were trying to get people to invest in their scam, and on their brochures, they put a picture of Warren Buffett. So it kind of gave the impression that Warren Buffett was involved with them. So people would think, well, if Warren Buffett's involved, it's got to be good. He had no idea. So, they were prosecuted and hit with a cease and desist order. Um, Scarcity. This is a big one. If you wait, it's not going to be around. If you want to say, oh, I want to talk over with my spouse, well, you know what? It's not going to be around by the time you call back. Well, if that's the way they're pushing it, your chances are you're better off. The social consensus. Everybody's doing it. Now, the one thing about this is what we see is in organizations, we have seen people actually join churches or fraternal organizations, and they took their time and they made friends, and then they got 1, 2, 3 people involved, and they got them involved to invest in something. They pay them back a little bit, so these people are like, "This is great," and they end up grabbing more people and bringing them into it. And because they're like, hey, this is great, we want everybody to share in this. Only by the time everything comes in, the money's gone, the individual leaves. And they put in here reciprocity. Hey, just do me this one small favor and I will do one for you. I have never seen that, but this is something they put in the slide. So excuse me. Again, if you receive the can't miss offer and you need to act now, please don't. Okay. Um, and they also use social media, and it's just something that um, you may think that the person that is you're chatting with, and then you see several other people on there. Oh, I bought this, and it's great, and blah blah blah. I made this, and I made this. That could be the same person using 6 different accounts and trying to entice you into getting something, doing something from them. So please don't ever invest off anything in social media. It's not going to end well. Now, some of the frauds that are targeted as seniors, we call these affinity frauds because they target people from special groups. So we have seen them at churches, veterans organizations, different ethnic groups. So if it's African American, if it's Lithuanian, Polish, or something like that, these people are very good fraudsters, and they identify with these people in this various in the various groups, and they gain their trust and get them to give up money, and it's usually then gone. Um, Again, the person that's telling you about the scam, the investment, they may also be scammed and just don't know it yet. And again, always check, even if you know the person. Again, I would, but especially if you know the person making the investment offer, because this is your money, and once a lot of times it's gone, it's gone. Now, investment newsletters. These may be totally 100% legitimate. However, you may be looking at advertisement, and these companies don't do, and they're really not even, all they're doing is selling advertisement. So they don't have the ability to check and do the due diligence about the companies that are buying advertisement. Same thing goes with various social media platforms. It's like now, you look at Amazon for a piece, something, and then all of a sudden, every time you look at on Facebook or on Twitter, now you're seeing everything that you've looked for. So the same thing goes with investments. If you start looking at investments, these things are going to start popping up at you. So be very, very, very wary. Then we have this is why I would love everybody to watch that movie, The Wolf of Wall Street, because he involved a lot of these things called penny stocks. Now, anybody that can afford, most people that can afford to trade on the stock market would not even get involved with penny stocks. What Jason Belfort did is he started off selling them blue chip stocks, and we're talking Apple, AT&T, the good stuff, GE, and they made good money. Well, then he started offering them penny stocks, okay, and these are garbage. And so, and if they lost money, he would sit there, well, I made you so much money, we can't make money all the time, and this is where you lose it at. We are seeing a lot of pump and dumps online, as far as like social media. So probably to take something, say a stock is trading at 1 penny a share, and that's, some of these are, okay. Some of them are trading less than a penny a share. So say somebody buys 100,000 shares at a penny, then he, it cost him 10 grand. So then he starts hyping it up online through several different accounts, and people start buying it. And when they're starting to buy it, the price will rise. So all of a sudden he's selling it at 5 cents a share, then 10 cents a share, 50, maybe up to a quarter a share. And then once it's all sold, he walks away with, $100,000, and everybody else that bought those penny stocks, the price will start to plummet, and they're left with owning a penny a share. So these pump and dumps are very big money makers for people that are engaging in them. So that's one thing that we always tell people to be very, very wary of dealing with, penny stocks or micro caps. So some of the red flags of fraud, and you kind of like see that we've talked about it already. It sounds too good to be true. When I see people like, oh, he told me he had, 25% interest. It's like, really, 25% interest, I just shake my head. I just I can't believe somebody would buy that, but they do. Okay. These people are very, very good salespeople. Huge upside, no risk. That's another big one. The pressure to buy right now again. Please, if your little spider senses tell you that something is just not right, walk away. You will never, ever be angry that you did, because you probably saved yourself some money. And then the lack of documentation. I don't have it with me now, but I will, I'll get it for you, but I just need you to invest in it now. Sorry, don't. So these are some of the advanced fee scams. These involve jobs or you've won the Nigerian lottery, or somebody that is a long distant relative of you died in the United Kingdom, and they're sitting on tons of money. But however, you got to pay the taxes and transfer fees, and they will tell you to usually either wire money to them or buy a bunch of gift cards. Be wary of government imposters. The U.S. government will never, ever contact you by phone, contact you by email. The only people I know that contact you in person are probably the FBI, and if that's the case, you got some issues other than this. but you are contacted by U.S. mail, and that we have a number, of a person to contact with. I like sharing this story. We had an individual that he's like a frequent online fraud victim, and it's happened to him multiple times. Well, he got contacted by email that his money was waiting for him at the Chicago SEC office, and instead of calling the number, which was not a 312, which would have been us, and they tried, mimicking our logo. It wasn't a very good job, and the document was in an attachment in the email. So instead of calling us to try to ascertain whether or not this was legitimate, he hopped on a first class round trip flight from Berlin, Germany to O'Hare, took a limo from O'Hare to our office downtown, only to learn that we don't hold money, and we actually don't pay the money back. These are handled by companies that are actually hired by the government to pay back fees and losses from cases. This is one that I added. If possible, do not use a debit card for anything other than getting cash out of an ATM. And the reason that I say that is because there are too many card readers, and because the debit card is linked to your bank account, they can drain your bank account from there by just scanning the information on a card reader. Yes, the company, the financial institution, once you prove it's fraud, they will reimburse you. However, that could take 2 to 3 months. And if you have a substantial amount of money in there, it'll be a while before you get it back. Whereas if you use a credit card, you are only obligated for the first $50 of fraud. And if it is proved fraud, then most companies will waive that. And then we have the unclaimed property emails. Again, these will want money up ahead, and just no place. You should not have to pay money to get money that is owed you. So be very, very careful of that. Okay, now we're going to go for planning for diminished capacity. I was very happy that they added to this because we are living longer. However, sometimes our quality of life is not as good sometimes if we, as we age mentally. So the best thing that you could sit there and do is Walmart, Costco, or Target, a 2-drawer filing cabinet, and put files in there, and you're going to want to keep information in there that in case you are not able to communicate, somebody could look at that and kind of have an idea of what needs to be done with you. Now, involving somebody you trust, this is a big one. I have seen where family members or some of the, have taken advantage of their parents and ended up selling their houses out from under them, taking all the money out of their accounts. So this is somebody that, you really need to look at and have a complete set of trust. So in here, one file for your bank and brokerage, mortgage and credit information, your various insurance policies, pensions, retirement, any Social Security info, and then one for medical professionals. Now, also, you're going to want to provide emergency contacts with your financial professionals for people that they may have to end up dealing with if you become incapacitated. Now, in Illinois, they have a Safe Harbor Act. I am unsure of what Wisconsin law is. However, it used to be, and where we would see this at is like if somebody was being taken care of by a daycare provider, and they knew that this individual was suffering from some, a dementia, Alzheimer's, or whatever have you. They would take them to banks, tell them, I want to, they would pre-fill out the withdrawal and take it up there and tell them you want to take the money out. And banks were very afraid of becoming subjects to any type of regulatory complaints or civil lawsuits. So they were required to give them the money. And of course, the person goes back to the car, gives it all up to the people that are taking care of them. And they may do this multiple times over the next, few weeks until the bank accounts are empty. Now, Illinois has, as I said, the Safe Harbor Act. So if you go in there and you are engaging in any type of conduct that is not normal, so say you never went in there and withdrew large amounts of cash, and all your deposits are automatic deposits. And if you took any money out, you either wrote checks or if you used a debit card. But all of a sudden you start coming in there and start wanting to withdraw large amount of cash. Excuse me. They have the ability to hold off on giving you the money and check with your other contacts to see if, in fact, what you're doing is legitimate, because you may, not be cognitive of what you're doing and what they're doing, and they are now immune from any type of lawsuits or regulatory action by taking these procedures. So some of the things, if you have a financial person, if you may give them these types of instructions, are you, if you're unable to reach me, please call this person. If you think I'm acting confused or strangely, please call this person. So those are always a nice thing. A lot of people that are investment advisors will already ask you for alternative contact numbers should something happen and they can't reach you. That's always a good thing. Again, involve somebody you trust. These are something that you have to make as a decision as a person, and you really should make it while you are able to make the decision. Do you, if you want, you can provide them an overview of your finances. Have a duplicate statement sent to that trusted person. That's strictly up to you. Have that person join you if you go in to visit your financial professional. Bring them with you. That's a very good one. As you get older, look at designating somebody as a power of attorney to make your financial decisions in case you become incapacitated. It's nearly impossible to do that once if you were to have a stroke and then couldn't communicate. It's a whole drawn out legal affair. So better to do it on your terms and with the people you want and trust rather than going with the courts. There are a bunch of contact numbers here. The SEC, FINRA, they all have senior contact numbers. So if you suspect senior abuse, senior financial abuse, you can contact them. Earlier, I mentioned that each state has its own securities department. So serveurseniors.org, you can go there, put in the state that you live in, and it'll give you the contact information for your state securities regulators. And then eldercare.gov, that is, if you wanted to report elder abuse, just in general, whether it's physical abuse, mental abuse, whatever have you. That's a number or website that you could contact. Other resources, Federal Trade Commission, the Do Not Call Registry, the stopfraud.gov. This one right here, this is a fairly new financial regulatory institution. It was instituted probably about 6-7 years ago, but it's a Consumer Financial Protection Bureau. So if you have problems with your mortgage or things like that, you could contact them. They have their own website, very easy to Google and find it from there. So, excuse me, SEC resources. So here we go. Back to Investor.gov. There is also a section for seniors. So, and what they do is they take main topics that come up the most, and they highlight them, and you can get publications, you can download them. There's just tons of information in there to educate yourself. Okay, I just ask people, please, just browse the website, get used to it. As you see here, we have the military. We have a section for youth to make them more understanding of investing, because the earlier you start investing, the better off you are financially, instead of waiting until you get old like me. Excuse me, sorry. Now, the nice thing about Investor.gov is whenever we, in our offices, we have 10 regional offices, and we have our headquarters in Washington, D.C. So whenever one of our offices receives a fraud scam, we send it to our office in DC, and right away they place that right on Investor.gov. So you could sit there and read these things. Sometimes they change daily, sometimes it may take a week, sometimes a couple of weeks. But you will see actual articles about what's going on, so you can, so if it happens to you, you don't fall victim to it. And right here is the Chicago SEC office. So if you call this number and you say, yeah, you have a question and I want to speak with somebody, they will forward your phone call either to myself or my colleague. Again, Investor.gov. We have a Twitter account, so if you are on Twitter, you can follow us, and it takes you, every time we're doing a presentation like this, or we have some type of action that we have taken against fraudsters, those are in there. And a lot of times what they do is it's just like the financial term of the day, and they will put this a term, and they'll tell you all about it. Also, if you have a specific question, just remember chicago@sec.gov. That's our email address. You could send us an email and just say, here's the question I have. We cannot give, sometimes I get calls from people, well, is this legitimate or not? We can't sit there and tell people something is legitimate or not. We can just tell them, that person's registered or they're not, or the investment is registered or it's not. And it's strictly up to them whether or not that they wish to partake in it. So right now I went through everything that we have. So if anybody has any questions, I would be more than happy to try to answer them. If not, if you come up with a question later, you can always email us at chicago@sec.gov. And
If there are any questions, please feel free to use the chat box. You're good, Terry. They have no questions.
Okay. All right. Well,
unless somebody's frantically typing.
Yeah.
Maybe we can just give them a moment.
But again, if anybody's got questions, feel free to call us, because we would rather talk to you on the phone before something happens rather than take your complaint after you've lost a lot of money.
Okay. All right, Terry, I don't see any questions here, so I think we're good. Thank you, everyone.